Welcome to Talk Tickers. We cut through the noise of earnings calls.
Whoa.
Well, we aim to give experienced investors like you the critical insights you need.
Exactly. No fluff, just the core information.
And today we're diving deep into the latest earnings call from Lyft. We'll get straight into the essential info, try to analyze what it really means.
Yeah.
And maybe toss around a potentially wild trade idea at the end.
Sounds good. So Lyft reported a banner first quarter for 2025. By their own account, it was their strongest Q1 ever.
Ever? Wow.
Yeah, marked by record numbers of active riders, completed rides, and also driver hours on the platform.
Okay.
Financially, they also hit new Q1 highs. We're talking gross bookings, adjusted EBITDA, and free cash flow.
Solid across the board then.
Pretty much.
Yeah.
And this quarter, it extends their run of double-digit year-over-year growth in gross bookings. That's 16 consecutive quarters now.
16. That's quite a run.
It is. And over the past year, Lyft has generated close to, almost $1 billion in cash.
$1 billion in cash.
And consequently, they've boosted their share repurchase program up to $750 million.
Okay.
And importantly, they saw growth pretty much everywhere geographically across different ride options in the app and, the different ways people use the platform.
16 quarters of double-digit growth. That's definitely significant. Okay, let's try and unpack how they're achieving these numbers. We should probably start with pricing. What did they say about the current pricing environment?
Well, interestingly, average ride prices in Q1, they were still a bit lower than Q4 last year.
Okay.
But they did show a modest increase compared to Q1 of the previous year. Lyft's stated philosophy seems centered on being competitive, yes, but also reliable for riders.
Reliability, right.
And features like their price lock are specifically aimed at enhancing that reliability.
Makes sense.
But what's fascinating, I think, is that management doesn't seem to view pricing as a major battleground or even a key area of focus right now.
Really? What are they focusing on now?
They're emphasizing product innovation. That's their primary way to stand out, they say. Their perspective seems to be, look, the market sets the price for rides millions of times a day.
Right, supply and demand.
Exactly. And Lyft largely operates within those market dynamics. They follow that lead.
Right. Okay, another big piece of the puzzle, always for ride sharing, is insurance. What's the latest on that front for Lyft? Any updates?
They indicated they're making, continued progress with their insurance programs, building on what they consider industry-leading capabilities.
Okay.
Their efforts to improve safety through tech, new product features, partnerships, that's all ongoing. They pointed to their smooth cruiser driver score as a tangible example.
That driver score, yeah.
Their main insurance cycle renewed back on January 1st. So no specific new details beyond what's already baked into their Q2 guidance.
So steady as she goes on insurance, basically.
Yeah. The overall tone suggests that, confidence in their current path and their long-term insurance relationships.
Got it. Now let's look beyond the U.S. border. We've seen some international moves. What's the current state of their global strategy?
Yeah, Canada is a real bright spot. They reported roughly double the growth year over year there.
Double.
Yeah, and that momentum has continued, up another 50% recently, apparently. They've just started onboarding drivers in Quebec, too.
Oh, interesting.
Quebec, with broader expansion planned later this year. But the big international news really is the anticipated acquisition of Free Now in Europe.
Right, Free Now.
They expect that to close in the second half of 2025.
Okay.
So in the near term, it sounds like their focus internationally will be, more like infill within Free Now's existing 9 European countries.
Rather than new countries straight away.
Exactly. Yeah. Not immediately venturing into totally new territories. The goal seems to be, let's maximize the potential of Free Now first.
Makes sense. Okay, autonomous vehicles, AVs, still the big what if in transport. What's Lyft's latest thinking and progress there?
They remain very, very bullish on AVs. They see them as a potential game changer, adding new supply, opening up new use cases for Lyft.
Right.
Their partnership with May Mobility, that's still on track for a launch in Atlanta this summer. That's pretty significant.
Atlanta this summer, okay.
They've also announced new partnerships in Texas for next year, and that involves a financing partner, Maru Benny, which kind of highlights the whole financial infrastructure needed.
Yeah, it's not just the tech.
Exactly.
Yeah.
Lyft is really positioning itself as the central platform for the entire AV ecosystem.
The whole ecosystem.
Yeah, we're talking equipment manufacturers, OEMs, financing companies, fleet management. They mention their Flex Drive subsidiary specifically.
Flex Drive, right?
And of course, the ride-hailing marketplace itself. Their aim is basically to be the go-to platform for AV companies looking to, monetize their assets.
So they want to be the platform for the AVs.
Precisely. Now, they do believe AVs will eventually lead to more vehicles, maybe lower costs long-term, but they acknowledge the timeline is still uncertain. You've got factors like repair costs and how insurance will be priced initially, probably conservatively.
Yeah, always hurdles.
Right. But ultimately, their long-term vision is a future where most cars have autonomous capabilities, creating what they're calling a Lyft-ready environment.
Lyft-ready. Interesting term. Okay, that's a pretty comprehensive AV strategy. Now, slightly surprising maybe, Lyft is also dipping its toes into integrating traditional taxis here in the US. What's the thinking there?
Yeah, they've launched a taxi integration initiative starting in St. Louis.
In Louis, okay.
This seems to be part of a broader strategic effort to, increase the diversity of supply on their platform.
More options for riders.
Exactly. Not just individual drivers, but also established taxi fleets, black car services. And they believe the experience from Free Now in Europe.
Where taxis are huge.
Right, where Free Now has a big presence in the taxi market. They think that experience will be invaluable as they figure this out in the US.
Let's switch gears a bit. Advertising revenue. Increasingly significant for tech companies. What's the latest with Lyft Media?
Lyft Media seems to be gaining real traction. They're reporting it's on track to hit a $100 million annualized revenue run rate by the end of this year.
$100 million run rate, that's substantial.
It is. And early results sound encouraging, showing a strong positive impact on brand perception for advertisers, good click-through rates, that sort of thing.
Go.
They're also rolling out new ad formats, like these vertical video takeovers within their Wait and Save feature.
Vertical video, interesting.
Sounds pretty engaging, yeah. And they're also experimenting with sponsored rides.
Sponsored rides, how does that work?
The idea is to drive foot traffic to physical stores, restaurants, things like that. Still in experimentation mode, though.
Got it. Now, looking at some finer details in the financials, gross bookings per ride was mentioned. What's driving that metric? Is it going up or down?
Well, the fact that gross bookings per ride are slightly lower is partly due to their growth in markets where they haven't historically had a huge presence.
Like Canada.
Like Canada, yeah. And some U.S. cities, Indianapolis, Charlotte were mentioned. Pricing dynamics in these newer markets can just be different.
Okay.
The commute use case, though, that remains strong for Lyft, which also influences this. But on the other hand, they are seeing growth in higher margin services like black cars.
Ah, so that helps offset it.
Right. Helps offset some of that downward pressure on the average.
Partnerships, they could have a big impact coming and going. What did they say about the end of the Delta partnership?
Yeah, they confirmed that ended on April 7th. Their current estimate is, it'll have a long-term impact of roughly 1% down on total rides.
1%.
And about a 2% decrease in overall gross bookings.
Okay, so quantifiable, but maybe not massive?
Seems to be their assessment, yes.
Looking ahead then, Q2. What insights do they offer? Expectations. Thoughts on the broader consumer environment?
They anticipate that the strong performance from commutes will continue right into Q2.
Commute's still strong.
Yeah. They also expect growth in those previously underpenetrated markets, combined with continued growth in their top markets, will drive results.
And the consumer. Any signs of weakness?
Importantly, no. Based on the data they're seeing, there are no current signs of weakening consumer demand. Ride volumes stayed healthy, even around busy times like Cinco de Mayo.
That's a good sign. Finally, it's always a key question for investors. Resilience. How resilient is this business model if, economic headwinds pick up? What's Lyft's take?
Lyft makes a case that ride sharing has really become fundamental for a lot of people. Daily routines, commuting,
right,
but also things like non-emergency medical transportation. They noted significant growth there.
In EMT, yeah.
Their argument is, look, if the economy slows down, maybe car prices rise. Ride sharing could actually become more appealing than owning a car.
Interesting countercyclical argument.
Kind of. They also point out that services generally tend to be more stable than, say, buying durable goods during economic uncertainty.
Sure.
And their large, flexible pool of drivers is also seen as a strength, provides adaptability, maybe acts as a stabilizer in the labor market. So overall,
they feel pretty confident.
Yeah. Lyft expresses confidence in the underlying resilience of their business to handle potential shifts.
One last area quickly before we get to the trade ideas.
Yeah.
Their Price Lock membership program. How's that doing?
Oh yeah, PriceLock. It saw a significant jump in subscribers, up 21% compared to Q4.
21% growth quarter over quarter.
Yep. And what's really interesting is the retention rate. Around 75% for these members.
High retention.
Very high. Suggests that program offering predictable pricing really resonates, especially, for regular commuters. Strong product market fit there, it seems.
Okay, this is where it gets really interesting. Based on our deep dive into this call, it's time for our This Is Not Financial Advices segment.
The fun part.
Exactly. So given Lyft's strong, even accelerating growth in Canada, especially with Quebec just opening up, here's an outrageous but plausible idea for you.
Lay it on us.
Consider a long position in, say, a Canadian small cap insurance company, one that specifically underwrites policies for independent contractors or gig economy workers.
Following the drivers.
Precisely. As Lyft's driver base grows there, particularly with a whole new province coming online, the demand for specialized insurance tailored to this workforce, well, it could see a significant uptick.
So an indirect play on Lyft's Canadian expansion.
Exactly, focusing on a likely beneficiary. But remember, everyone, purely speculative. This is absolutely not financial advice.
Got it. Okay, my turn. Outrageous but plausible idea number 2, with Lyft clearly emphasizing Lyft Media, growing that advertising revenue.
The $100 million run rate target.
Right. Consider this. A short position at a publicly traded company that owns a large network of static billboards, primarily in major U.S. urban centers.
Shorting billboards. Why?
Well, if Lyft's in-app platform proves highly effective at reaching its audience, and as they roll out more innovative ads like those vertical videos,
They might eat into the traditional ad spend.
could happen. Traditional outdoor advertising might face increasing competition for those ad dollars, especially in cities where Lyft is strong. It's a contrarian idea, definitely carries risk.
Big riskus. And again, everyone.
Not financial advice, just food for thought.
Absolutely. Okay, that wraps up our deep dive into Lyft's latest earnings call. We've covered the key financials, their strategic moves pricing, international, AVs, advertising, and consider the resilience question.
Hopefully this analysis has given you some valuable perspectives.
As always, make sure you do your own thorough research before making any investment decisions. Seriously.
The trade ideas are purely for discussion. Please don't take them as recommendations.
We encourage you to think critically about all this information, consider how these trends might fit into your own investment framework. What were your key takeaways?
Yeah, we'd love to hear your thoughts. Join the conversation online if you can.
Thanks for tuning in to Talk Tickers.
We'll be back soon with another deep dive into the world of earnings.